Next up, we have Barton Gold, ASX code BGD. The company is building South Australia's next major gold producer, targeting 150,000 ounces a year through a staged low-risk development strategy. Presenting for the company today is Managing Director and CEO, Alexander Scanlon. Alexander, thanks for your time. Over to you.
Thank you very much. This feels very familiar. I think I was with you guys last week. Look, in really simple terms, what is Barton Gold doing? We have captured an entire historic gold district, and we are now building that into a large-scale gold production platform. We are a pure-play gold developer focused in South Australia. This is a home to a very famous geological domain known as the Gawler Craton. And on the east side of the central Gawler Craton, BHP has consolidated the iron oxide copper gold district. So this is Prominent Hill, Carrapateena, and Olympic Dam. On the west side of the Stuart Highway, this is where the same mineralizing basin goes from being deep and coppery to shallow and goldy. And there are a series of historical high-grade producing assets. We went in during 2017 to 2020 and acquired the rights to pretty much all of these. We bought the rights to acquire the only gold mill in the region. In 2019 and 2020, we crystallized that. In 2021, we took Barton Gold public. What we have done in the time since is not to rush operations, rush that mill back into operations, I should say, because we are not targeting a 50,000 ounce production platform. We're targeting a 150,000 ounce production platform. So we have scaled all of our assets. We have now demonstrated that Tunkillia is a large scale, very attractive mid-tier style asset. So we've now created a destination of institutional scale and consequence, and we are now going back and going to look at starting our central Gawler mill by the end of 2026. Get that going, re-rate the company's equity and credit profile, and then use that to fund the development of Tunkillia and take us to the 150,000 ounce per annum destination without spending the type of money you typically would require to get there. So we've come a very long way over the past 5 years, and essentially over the last 4 to 5 months, we have pivoted from being a sort of conceptual developer to very much a developer in practice. We now have a definitive feasibility study underway for our stage one operations at the Central Gawler Mill. We have a number of programs of work at the Tunkillia project, which will take that to ore reserves, feasibility, and a mining lease application also by the end of 2026. And we're also now starting to focus on our regional enhancement strategies. That's the acquisition of the Woodina project, which will be high-grade blending feed, and also the Tarcoola project, which will also be high-grade blending feed. Both of those going to our Central Gawler mill and our future Tunkillia mill. In terms of our capital structure, we are a fairly simple creature in the sense that we only have about 240 million shares outstanding. Today, we're about a 250 million Australian dollar company. Very importantly, is a very high quality share register. So about 75% of the company is very tightly held amongst board and management, institutional investors, and then high net wealth and family office groups. The 25% of our register that is retail is actually quite a large number of investors. So Barton Gold has never done a retail placement outside of our IPO, which we did in June of 2021. At that time, we had about 500 retail shareholders. Today, we have about 4,000. So what we have is a register that is at once both highly consolidated, but also highly liquid. And we trade over $1 million worth of shares a day, which is more typical of a much larger company than us. So we've built this very, very healthy register. We have a lot of very strong institutional support. We're very well financed. We just completed a $15 million placement led by Franklin Templeton. If you're familiar with gold funds globally, they are really sort of the blue chip of the blue chip. And we settled them last week at a premium to the last closing price. So they settled at 125 per share, and today we're at 110 per share. So we think it's a very strong endorsement of the way that we do things and where we are headed, particularly moving towards operations. In terms of our capital structure, some of the other presenters today have touched upon this, but the people really are the most important part. We have built a team that has hundreds of years of experience finding, permitting, financing, and building major mining assets with a particularly strong pedigree both in South Australia and in gold. In South Australia, on that topic, we are all based in South Australia. This is not a fly in, fly out team. Our assets are here. We are here. We have built a team of native and adopted South Australians who have each decades of experience. I'm sort of the youngest resident of the state at about 7 years now. decades of experience building things in and for the state. And the sort of the nexus between our team, South Australia, and gold is that South Australia was actually the home of Normandy Mining, which is the largest gold producer in the Southern Hemisphere, and Australia's largest gold producer through the 1990s. Purchased in 2002 by Newmont as a 2.5 million ounce per annum producer. Half of my leadership team come from Normandy and Newmont. So we have deep financial, social, political, regulatory relationships here, which are essential to making sure that we can go do what we're doing, which is essentially leading the redevelopment of an entire region on something that is much more than just a single mine or single asset or commodity development story. When we look at our assets on a map, this is sort of a very useful reference point. Again, we acquired these assets in the top left corner in the end of 2019, early 2020, and we immediately set about scaling Tunkillia, this asset here in the middle. Now, we did not talk about our existing mill. We did not talk about the other existing mines. We wanted to create a destination of institutional scale. In March, we upgraded that to 1.6 million ounces of gold. In May, we published a study showing that it'll produce about 1 million ounces of gold from a pit defined at about half of the current Australian gold price. So this is going to be a very attractive producer. It has some very attractive metrics I'll take you through. But the point is we created a destination where the turning on of our existing mill is not the be all and end all, although it is a meritorious and valuable thing. It becomes a stepping stone to something much larger. So we have now gone up to our central Gawler mill here, up in the northwest. We've now gone and done 2 quick successive resource upgrades. We have published an initial study showing that it will cost only about $26 million just to reinstate that plant as is. And we've started a feasibility study looking at turning on our central Gawler mill and the Challenger mine by the end of 2026 so that we can cheaply take that step into operations, re-rate the company's equity profile, re-rate the company's credit profile, start generating cash. And then when Tunkillia is ready to be built, hopefully in 2028, we can actually self-fund that. And we already have very interested credit partners from European and North American institutional banks. When we look at Wudinna and Tarcoola is the home of high-grade South Australia's high-grade gold rush in the 1890s, same year as the WA gold rush. This is an historical gold field where we have high-grade gold and we've made a very high-grade silver discovery. This will be blending feed to both of these mills, and the Wudinna project will also be blending feed to both of these mills. Looking at that central Gawler mill, this is what we're looking at as our sort of stage 1 asset at Challenger. In very simple terms, this is a 600,000 ton per annum plant. It's fully permitted. It runs with very high recoveries at 94 to 95%. We now have 300,000 ounces of mineralization next to it, 100,000 ounces in historical tailings, and 200,000 ounces in high-grade fresh rock ore that is on the existing open pit and on the existing underground. So this is literally walk up and mine mineralization. We are looking at a 2-phase restart of this that will be sort of phase 1 reprocessing of historical high-grade tailings. In our original tailings facility, we actually have sort of an outer donut ring of mineralization that grades between 0.6 and 1 gram per ton gold. And this is very simple, coarse material, very clean metallurgy that we can recover between 70 to 80% of that gold just by remilling it. So we'll make a low-risk transition to operations, start production, and then at the end of 2027, we'll start blending in that hard rock feed and average up the feed grade and go from maybe 20,000 ounces to 35 and then 50,000 ounces per annum. And that will generate a considerable amount of free cash, particularly at today's gold prices, to then develop Tunkillia. Now, Tunkillia, this is again more of a standard mid-tier style of asset. It's about a 1 million ounce size pit. It'll produce about 120,000 ounces per annum of gold and 250,000 ounces of silver. This fits sort of in the bottom half of the global cost curve of production, and we are seeing that cost curve shifting up as underground operating costs are increasing rapidly. So this is getting to be a more and more attractive asset generally. Where it is particularly attractive is in the financing profile and the returns profile. So this at $5,000 gold price, so again, well below the current price, this produces about $2.7 billion in free cash over 8 years, nearly half of which comes in the first 2 years. And that's because we have these 2 stages of pits at the beginning of the operation where in the middle of the main body of mineralization. And what you can see here is mineralization that's 80 to 100 meters wide. So very broad, very bulk, very efficient mining, very low cost. We actually have this interesting pocket of high grade material in a 300-meter long zone. So when you develop this and you have an initial starter pit, which we've called the stage one or starter pit here, when you compare the life of mine average metrics, 5 million ton per annum, zero point 0.8 gram head grade, $2,200 Australian cash cost, very standard bulk open pit operations. When you look at that starter pit, for that given 5 million tons of processing, you're not producing 120,000 ounces, you're producing 180,000 ounces or 200,000 ounces. And what that means is your cash cost is actually below $1,000 Australian. So this has a $400 million development cost, which we can self-fund in terms of the equity, but you get back over $1 billion at current gold prices in year one. So the payback profile is exceptional. The financing profile is exceptional. And the lesson here is the lesson of the economic torque to marginal grade. So then we look at our regional assets. Wudinna, this is an asset we've just acquired. It has very interesting metallurgy, up to 99% total gold recoveries, but importantly, very efficient flotation. We can take, we can essentially float 90% of the gold into 6% of the mass, and instead of processing 600,000 ton per annum, we're trucking that up to a mill. We can take 600,000 tons, we can float it and concentrate it into 36,000 tons, and just send 100 tons per day in 2 trucks to either or both of our mills, and essentially supercharge that gold output and drive down the cost per ounce and therefore the profit per ounce. So this will be a very interesting project for us as we move forward, particularly for blending in either mill. And then in Tarcoola, just briefly, this is again the home of South Australia's high-grade gold rush. That's in the southwest corner of our project here. You can see this big cluster of stars on our mining lease. We have an open pit mine there. We identified the structure that created this cluster of sort of 600 workings. And then we found another one using new seismic in the area. And what we did was first make a gold discovery and then a very high grade silver and high grade gold discovery 500 meters to the west. So this has captured a lot of people's imagination. In really simple terms, the discovery hole here in March of this year was 6 meters at 4,747 grams per ton silver. It was the 5th highest grade silver intersection reported on public markets in the first half of 2025. It happens that that also has 13 grams of gold with it in addition to the silver. So that's sort of like saying you have 6 meters at 60 grams gold plus 13 grams gold, all within 50 meters of surface. We've now drilled this north, south, east, and west. There are sort of 2 horizons of silver, an upper lower grade blanket and a lower very high grade silver blanket with high grade gold. We've done some more diamond drilling. We're waiting for those results to come back, but we've just reported some soils suggest a strong gold, silver, lead anomaly over this region that indicates that this mineralization does indeed spread out. So as we dial in on sort of the host rock mineralization and hopefully grow this, this could be a very exciting asset that, again, happens to sit right between 2 mills that are tuned to producing gold and silver. So in summary for us, the last 5 years have really been about essentially crafting and creating the essentially theoretical narrative about what this area could be. We have now crystallized 2 very strong commercial platforms, and the next 18 months is essentially about taking those through the commercial pathways. Our stage 1 operations at the Central Gawler Mill through to operations, and our stage 2 development asset at Tunkillia through to a mining lease application, targeting a 2027 approval, 2028 construction. And so we can go again, rather than trying to jump to that mission today, we focus on our existing mill while Tunkillia is walking its normal path. And instead of waiting 5 years to go from 0 to 150,000 ounces, we go from 0 to 20 to 35 to 50 to 200,000 ounces per annum the year that Tunkillia turns on. So we think we built a pretty interesting proposition. We've done it with very low dilution. We've done it very cost efficiently. We are now very well financed. In fact, we have more money than we've ever had in our history. You can see what we've done with the much less money that we have had. So we are quite excited about the future. Very interesting things happen when you shift from our current status to operations. And for us, it's a very short capital drawbridge and a very low risk proposition having an existing fully permitted mill. So thank you very much, and very happy to answer questions if there are any.
Thank you so much, Alexander. There is a two questions here. So you may have touched on this already, but just to further reiterate, you've commenced the DFS for stage one production at the Challenger project. What does this study involve and why is it such a significant milestone for Barton?
So what we're looking at doing at this sort of stage one DFS is we are looking at essentially breaking the plant in two from an engineering standpoint. What we are looking at doing is first using the back end of the plant, essentially the leaching circuit and the recovery circuit to reprocess historical high-grade tailings with some new fine grinding in the front end. So we are now doing geotechnical drilling and test work on the tailings facility to figure out how we're going to mine that. We essentially want to mine down those high-grade shoulders of that tailings facility. We want to cost efficiently remill that material from about P80 of 225 micron down to somewhere between 10 and 40 micron. So we're going to be doing very equipment specific analyses to figure out what is the highest gold recovery to energy consumed payoff between different types of special equipment to do this. Glencore makes an ISOmill, Metso make a tower mill, Como has some of their equipment. So that will be focused on essentially optimizing the back end of the mill in a matter of speaking. In parallel, we will be looking at optimizing the crushing and grinding circuit and also doing open pit and underground mining studies for the open pit and the underground. We have a lot of mineralization to walk up and take away from those areas. The trick is at what point do we cut off? How far do we push down the underground versus maintaining the underground mine? So that work will be done in parallel. And when we combine these, which we're aiming to complete this whole study by the end of March, what it will do is lay out a fully costed, very confident pathway to what do we invest to turn on the first phase of operations, and then what exactly are we mining and what do we invest out of the phase one earnings to move into phase two, which is the introduction of hard rock mining at the end of 2027. It'll give us a very clear pathway, and then that will also tell us that we've got our funding set for Tunkilia.
And Tunkilia is advancing through development, planning, and economic exploration success at Tolma. What are the key news flow items investors should be watching for over the next 6 to 12 months?
So a couple of key things here. One, we are more than halfway through the first phase of resource upgrade drilling at Tunkilia. So the stage one and stage two pit, we have a first phase of 18,000 meters of drilling underway presently. That drilling will actually upgrade all of stage one and stage two to indicated with this very highest grade central portion that you see here in the middle of the stage one pit brought to measured. What that will do is one, yield high grade drilling results. We know this because these are what we've previously published in this area. So that will be very interesting. We'll have a very steady flow of drilling results over the next couple of months. And then we'll have the second phase as well that brings the rest of the pit into reserve. But that will result in essentially giving us the very high degree of certainty under that high grade mineralization there to underwrite financing conversations and accelerate those. At Tolmer, we have diamond drilling results pending in this sort of what we call the Eastern Gold Zone. What we are looking to do is understand the structural and stratigraphic controls that are going on in that area because we are down in the actual fresh rock host structures there. This is an area with a lot of repeating geological structures. So if we can identify those structural and stratigraphic controls there, we can transpose those over to the west and start dialing on how we grow this. For us, we have 3 different drilling programs underway: resource upgrade at Tunkilia, exploration here at Tolmer, production and geotechnical drilling at Challenger. We're essentially going to be nonstop drilling results and technical results and financing and progress and commercialization and procurement all the way through to the start of production. So it will be very, very busy for us for the next 12 months.
Alexander, thank you so much for your time and thank you for sharing the Barton Gold story. Thank you again, and we'll see you soon.
Thank you very much.